Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey, everybody. Welcome to Mortgage on My Mind. This is Natalie Salins, your host. And today we have Karla Ukman. She is a financial advisor. Amazing, because we haven't had one yet on the podcast, so I can't wait to speak with her. She is a, quote, not your father's advisor. When she first looked for financial help, she was dismissed and told that she didn't have enough money. And coming from a background without generational wealth, she experienced firsthand how the system makes people feel excluded and powerless. And that is why she founded Artemis Wealth Management and why she works today as both a wealth planner and financial coach. Carla partners with women and marginalized communities across the country who have been left out of traditional wealth building conversations. Through personalized planning, investment, and insurance strategies and ongoing financial education, she helps her clients align their money with their values, take control of their finances, and build the kind of wealth that they desire. With over 13 years in the industry, Carla does more than create plans. She gives clients the financial education behind the why of every decision, so they leave confident and empowered and fully in control of their financial future. Thank you so much, Carla, for being on the podcast
Thank you.
today.
Appreciate you having me.
Yes, I love your intro. I found out just a little bit ago, actually on the podcast, that like women, this is going to shock you. Women weren't allowed to buy a home in America without their husband's name with them until the early 1970s.
74.
74. Yeah.
Yeah.
How insane is that?
Yeah.
Like,
I have a client that has their original credit card that they didn't have to have a male to sign. So it could have been a dad or a husband.
Yeah.
It's crazy.
It's so crazy. I know.
That's why we're behind. That's why women are behind.
Yeah. We're going to leave that for another podcast, but
we could talk for hours.
I know. I agree.
But we're not going to talk about that today.
I live in California, so I get it. But yes, we're not going to. I would love to start with, we understand a little bit of why you got into it, but how did you really get started, and what has it meant for you to begin being the financial planner you are?
Yeah. I didn't grow up with money, and I actually got married super young and had a child super young. And that's part of my story, because we didn't have money. We worked 3 jobs and went to night school and never saw each other, and just was part of the system, even though we worked so much. And we used to eat a hamburger helper without a hamburger because we just couldn't survive. But going through the schooling and everything, I started working my way up through corporate America. And all of a sudden I started making good money. And my husband was making good money, and no one wanted to help me. And we made tons of money mistakes. We went through 2008, and it was just a lot. And someone that was a family friend said, "Hey, you should get into this industry because you're really good with people. You want to make a difference." And I thought about how the industry itself has no really representation with women as advisors. And I decided, you know what? I've always wanted to be in rooms, and I always was in rooms that pushed for different representation. So I decided to get into the industry, and it's my calling. This is what we're supposed to do. That's what I was supposed to do with my life.
Yeah, for sure. Finance is much, much more today a field where both men and women are in. But certainly, even when I started over 20 years ago, I was the only woman at the table, like
Yeah.
me and 12 men
Yeah.
when it comes to loan officers and stuff. Yeah.
Less than 20% of advisors are women still today.
Wow. I would probably say it's the same in the loan
Absolutely.
officing world. Yeah. Yeah.
Yes.
Let's talk a little bit about debt and why not all debt is bad debt, and
Mm,
how having debt with building credit and being able to use and utilize debt towards wealth, and give us a little bit of an understanding of that. Why is it
yeah.
misunderstood? Yeah.
Really, for the society tells us, and there are tons of money coaches out there that are popular that are like, you should pay cash. You should pay with everything with cash. You should not have a mortgage. You should not utilize loans because all debt is bad. And when we're thinking about that narrative, we need to actually shift the way that we think about building wealth and utilizing debt because the wealthy use debt. They use other people's money.
Right.
And that's the way that we should be looking at how we're building wealth, how we're utilizing debt. So credit card debt, not all of it is bad either. It's how do we use it that
Exactly.
that we're building our wealth intentionally.
Do, do you overuse it? Do you take advantage of it?
Yeah,
It's how you use it. Do you use it responsibly?
absolutely.
Yeah, yeah. I
Yeah.
know for me, if I didn't utilize debt, if I couldn't get a mortgage, I wouldn't own the properties that I own. And the equity that I own in those properties would never have been built for me if I couldn't get a mortgage and have debt. And I have a lot of debt.
Yeah.
Like sometimes it freaks me out when I see what is actually under my name. I'm like, oh my God, I have a lot. It's overwhelming,
Mhm.
but it's utilizing it to build wealth for sure.
Yeah. The wealthy, they are not using their own money. I mean, it's plain and simple. They're not using their own money when it comes to purchasing assets. So that could be a business, that could be property. They're using other people's money because it's less risky.
Yeah. And what does that mean exactly? Like how?
For example, a mortgage, you're using the bank's money.
Right.
You're not using your cash because so, for example, I have a lot of clients that are like, just don't want to have a mortgage. I just feel like that's a bad thing. But if you could actually have that mortgage, okay, and you're paying a certain amount, let's say $1,000 a month, I'm just going to use that for round numbers. And if you would have used your own cash to purchase a house, now you're taking, let's say 200,000 to purchase a house, you're taking $200,000 away from being able to put that into the market, being able to put that into other areas of your life, and you're not actually maximizing every single dollar you have. That's what the wealthy are doing.
I'll I was telling you before, I have clients that will come to me and be like, I paid off all my debt. I'm ready to get a mortgage. And you're like, who told you to do that? How did that happen? How did that misconception of needing to have no debt in order to get a mortgage come around? Because having debt is actually a good thing when it comes to your FICO score. And your FICO score is really important when it comes to getting a mortgage or obtaining any type of debt or liens against you. Because what it does is a lot of people from overseas will be like, I have no debt. My credit should be perfect.
Mm-hmm.
And I'm like, what is credit? What is FICO? What is that? All that is a system based on figuring out how well you pay debt. That's all it is. If you don't have debt, it can't rate how well you pay it.
Mm-hmm.
So having no debt is not going to give you a high score because we have absolutely no idea how responsible of a person you are if you haven't been able to prove it to us, right?
Yeah.
So that's why
Yeah.
having credit cards is so important. Why having the debt is great as long as you pay it responsibly. They come and you're like, oh my gosh, you just paid off using all of what your down payment could have been.
Mhm.
So it's just so important to speak with a financial advisor or speak with your
Yeah,
loan officer before you make any huge moves with your money. Most
absolutely.
likely you're not informed well of how you're about to use that money.
It's having a money team and having the right people on your money team because they do this all day, every day. They're experts.
Yeah.
You're an expert in your field of whatever you do all day, every day. I can't go do anything else because I'm an expert in my field and I hire the experts and I talk to the experts. And that's where the mindset has to shift because if we're trying to DIY everything, then we're actually leaving money on the table. We're slowing down our wealth journey, and we're also not maximizing every single dollar that we have. And that should
Right.
be the ultimate goal.
Exactly. Exactly. And so with that said, how do you help clients see that money as a tool and not as a
Yeah.
stressor?
Yeah. One of the examples is when we're looking at getting a mortgage and looking at the rates and looking at their wealth. I utilize financial planning software that's only available to financial planners. So
Sure.
not a calculator. It is actually a planning software. So it projects where are we going to be in 2, 5, 6, 30 years with taxes and inflation and all the things. And when we do those projections, it actually makes it less stressful because we can see where we're going and how our net worth and how our money is going to end up. So, for
Right.
example, if we are taking out a 15-year mortgage or a 30-year mortgage, we'll do the calculations to see would it have been better to take out a 30-year mortgage with a lower interest rate, invest the money that the difference of payment, invest that money, get growth on it. Now we can put more money towards the mortgage and pay it off sooner, but because we're paying lower interest, it actually might have been better. And we also have more liquidity as well. So that's an example. And it's not as stressful because we can actually see where what the numbers are and where we are with our net worth and our cash flow. And it's understanding because when we don't understand where our money's going, that's what creates stress.
Totally. Going back to the empowering women and power of home ownership, what barriers do you still see exist right now for women building wealth in real estate? We did talk about the fact that it was not so far in the past that women were
Mhm.
able to purchase on their own.
Mhm.
What would you say, if anything, still exists now that you're still seeing?
Women don't get paid as much. So that's a factor. So that affects what we can ultimately purchase. Also, there are still a lot of money myths that are being fed to us women when it comes to our wealth. So that is, we're not good with math. We
Mm,
overspend, which is actually false. We do not overspend. Men and women actually spend exactly the same amount. We just spend it on different things.
okay.
There was a study that was put out a few years ago and they talked about how women are purchasing things that are tangible. We like to go shopping. We like to do things. Men are spending money on non-tangible things as well as drinking, going places that they can't bring home necessarily. We're the ones that are doing a lot of the household shopping. So we're bringing that back and it looks like we're spending more, but we don't. So what happens is women are holding ourselves back because we have these narratives since we're children being fed to us that we can't do certain things because we're just bad with money and we're not. And so we're holding ourselves back as well. But society and the system is holding us back because we haven't been able to get credit since without a man since 1974. And that actually influences generational wealth, which influences why we can't always get approved because We also don't have the education. There isn't financial education that's taught in schools. And so we're just going out there just trying to figure it out. And it goes back to our conversation of all debt is bad. It's not. So if we actually have the financial education and literacy, we would be able to shift our assets in a way that could help us have our home ownership and other things that we desire.
I think overall, as a whole, people are not educated on home ownership at all.
No, not at all.
Nobody is given the tools to
Mhm.
understand what this process looks
Mhm.
like and how to prepare themselves for it at all.
Yeah,
As a whole,
I
that's
wasn't. I had
no,
no idea.
none of my clients, none of my clients. I created a book, a very basic booklet of what it is to get a mortgage and buy a home
Mhm.
because people don't know what an appraisal is
No.
and why one is needed and what does it mean and anything, what's a debt to income ratio, all of the things that come into play when we're looking to qualify you, which is okay too. Some of those things are not as significant and necessary, but the basics again of credit, down payment, things like that. The fact that people still think you need 20% down
Yeah.
when you can do 5% down. And I'm sure you probably advise your clients quite a bit, especially now when we don't want to be liquidating out of the market, right?
Yeah.
I have clients who have tons of money in a portfolio of such and are being told to only use 10% down. And I'm like, but you want to buy a jumbo. Look,
Yeah.
10% is going to give you a terrible rate. It's not really
Yeah.
best interest. Can we do 20? But that the financial advisor is really your money is making money right now. Do not liquidate and put as little down as you can. Save, keep the money working for you in the market right now. What are your
I think
thoughts on that? Do you agree or
I have clients that liquidate. Here's the thing. The market, we can't dictate what the market's going to do because it could be up today and down tomorrow. The
totally?
biggest thing is working with someone like yourself and someone like me, where we run the numbers and say, on average, if this money stayed in for another 5, 10 years, would it have been better for us to put more money down because it would have helped with the interest rate? And how does that affect us in 20 years? And if we
Right.
don't run those numbers, then you can't make a recommendation on keeping money in an investment account. I see that a lot in my industry. Advisors are different than financial planners. And
What's the difference? Tell me, because I don't
yeah,
even think I know the difference.
yeah, no. So not every financial advisor does financial planning. And so financial advisors, a lot of them will just gather assets and help you invest it. There's
Okay.
nothing wrong with that, but that's all that they do. On the other hand, wealth planning and financial planning, that's what I do, is I'm helping you with your assets. We're investing it, but I also do the financial planning side of things where we're making sure that everything is working together. We run the reports. We look at how do you even pay down the debt? How do you start saving for retirement? How do you start saving for that home purchase? I have a lot of clients that want to purchase multiple properties. How do we even start saving for that? How is it going to affect your long-term portfolio growth? And do we start shifting your assets in your investment account so that we can take money out of it so that you can put it towards a down payment? So it's completely different. And when you're looking to work with someone, if that's your desire to understand exactly where your money's going, how it can work for you, and especially when you're going to start purchasing and looking at purchasing a property, you need to have a financial planner, not just a financial advisor.
Right. Interesting. Yeah. I've never really, I thought they were the same thing. I thought they're supposed
Yeah,
to be the same thing.
I get that a lot. They're not, and it's okay. It's just
Yeah.
everybody has their own lane, and you got to make sure that you're working with someone that fits what you're looking for and what you
Yeah.
need.
Totally. Because what I think I just have somebody who helps me run my like
Your
investments.
investments, yeah,
I don't think that's a financial planner though.
no,
Definitely doesn't. He advises me on the investments, but
yeah.
not on anything else. That's so funny.
Yeah.
Never really
Yeah.
thought. Yeah, interesting. And what would you say that you should consider financially before buying a home? And obviously understanding affordability and stuff, but what would you say is one of the biggest things that you tell clients, like before you buy a home, this should happen?
Yeah. So in my software, we can actually pull up what the average like taxes are in your area. And I think that a lot of people forget to look at what is your homeowner's insurance going to be? You can get a quote. You don't have to wait till you're signing paperwork. Call your insurance company, ask them what would be a quote for this in homeowners insurance. What are the taxes in your area going to look like, whether that's local and state, if that's applicable for where you live, and also maintenance. What
Mm,
is it going to cost for you to even live there? What are you, and those are costs that people do not think about. And I see that too many times. And then they're like, oh, I didn't even think about this. I cannot barely afford the taxes and other things that are going to be in the area. And how much is it going to cost to maintain this property? And so those are items that I would definitely look at.
got it. And are there things to help people, besides obviously saving money, which a lot of people in America can't do? It's a really hard thing. What would
Mhm.
you say are steps to help build a stronger financial portfolio for people, like besides saving, putting money away every month kind of thing?
I think that the first step is understanding where your money is going because there's a lot that we spend money on that we don't necessarily need. There's so
Yeah.
many subscriptions that we're paying for, and making sure that when you're looking at your cash flow, what are your ultimate goals? And how are you going to reach those? Because everybody's goals are different. So if that
Yeah.
means that we're going to be saving for a down payment for a home, then we reallocate some of our funds to that savings and maybe cut out some of the subscriptions. The other way is, and we were talking about debt earlier, we need to not give up free money. There are so many cash back and reward programs that you can take advantage of with credit cards and other
Totally.
places. I use Rakuten. By the way, I don't get paid. Okay, I'm gonna say I love Rakuten. You get cash back. You're already purchasing items and it's a cash back company. It is not a credit card or anything. You can
What
look
is
into
it?
it.
I've never even heard
Rack,
of it.
yeah. Oh, Rakuten. And now they're Rakuten, if you hear me, please. No. But it's amazing. They advertise with the Golden State Warriors. You'll see them on,
I can see the name. I
yeah,
just don't know what it is.
yeah, it's a cashback. It's just a company that gives you cash back for purchasing items. So, for example, if you purchase something from like Nike, okay, if you go on Rakuten, it'll say, hey, I'm going to give you 4% cash back. So you'll go to Nike's website through Rakuten, and then they'll go ahead and off of your purchase, they'll give you 4% for spending money at Nike. Especially during the holiday season, go on websites like that. They're legit. You can see them, and they also give you extra cash if you refer people to them. And so, those are just ways of utilizing rewards so that if it is hard for you to cut certain things out, especially where we are, there's ways of making extra money without you having to spend extra money.
Interesting. Wow. Can't I have to look that up when we're done?
I
Did
love
not
it.
know about
I
that.
love it. And during the holidays, I like to stack deals, and I got a pair of sneakers for 20 bucks, and they were from Adidas, and they were normally like 120 or something like that. Yeah, I love it.
That's awesome. And it like stays in the account, the cash back
You get
stuff stays
cash
in
and
your
they
account.
pay you like through PayPal, and then you just get it and it's cash. You can have it stay in PayPal or you can go into your bank account. It's actual cash. It's not like a Visa gift card or anything like
Right.
it's actually cash.
That's amazing. So
Yeah.
cool. Thank you for that little hint.
Yeah. Dropping the gems here.
Exactly. That's why we're here. That's why we're here. It's thinking about like that buying a home is not the end game, of course, for building wealth, and that it is just like this financial ecosystem. How do home ownership, like, how does home ownership fit into the bigger wealth picture? What
Mhm.
role necessarily like taxes and investments play in this?
Yeah. So when we're looking at the overall picture, how does having a home affect your ultimate like end of life? So retirement and end of life. And having when I run numbers, I'll run it as if they don't purchase a home and if they do purchase a home. And we'll create inflation and we'll look at everything. A lot of
Mm,
times it makes more sense because when we get into retirement and past retirement, because we have a home and we no longer have that extra expense that's going out to rent
right.
and other things, it drastically changes our retirement years for positive.
Interesting. Yeah, of course.
Yeah. Now, I know that a lot of people are listening to TikToks and Instagram, and there's a lot of people that are saying don't have a mortgage and only rent. And then you have the flip side, don't rent and only have a mortgage. The biggest thing is how does it fit into your financial picture? And ultimately decide how do you want your life to be? What is your ultimate goal for your wealth?
Exactly. And speaking of that, like, what does legacy mean to you and your clients? And how you guide families into aligning their money with their values?
Yeah, I love that question. It's different for every single person.
Right.
And some clients will say, you know what, I want to be able to gift money to certain nonprofits throughout my life. Some clients want to create a certain amount of money at a certain age so that they can help their children, their nieces, their nephews, whatever that looks like, their parents. And other clients are wanting to just have freedom to do what they would like, whether that's traveling, moving to a different state whenever they feel like it. So it's different for every single client. The biggest thing is that they've all looked internally and sat with themselves and really thought about what do they ultimately want to desire. And I share with my clients, don't think about what you need to have, and especially what you are told what you're supposed to have at certain ages,
Right.
because it's different for every single person. It's what do you want? And then we'll be able to build that out for you. I have one client that is single, doesn't have kids, parents are older, but they want to be able to travel and just pick up and go whenever they want, but they also want passive income. And how are they going to have the passive income? You can have that in investment accounts, by the way, but they also want to have property to
Sure.
help with that passive income. So we're working towards them being able to have another piece of property so that they can have passive income so that they can travel and have that legacy.
Exactly. And what trends are you seeing in like the philanthropic planning?
Yeah, I do a lot of that. And with the Gen Z and the millennials and
Yeah.
even the Gen X's, we all have different views of what philanthropy means to us. The Gen X and the millennials want to create as much impact as possible. And
Yeah.
what I'm seeing is the money that they're inheriting from their parents, they don't want to just sit on it. Some of their parents might have. They want to go out into the community, serve the community, and say, hey, this is something that is super important to me. How do I get more involved? And how can I
Oh,
structure
nice.
my wealth for
Yeah.
now, not when I'm gone? I want to help
Mhm.
them now.
That's so nice.
Yeah.
Nice
Yeah.
that it's shifting for the good, that the younger
Absolutely.
people are, that it means something different for them.
Yeah.
Thank you so much. This was wonderful having you on. Thank you for
Thank
sharing so much
you.
information, new information for sure. Everyone, Carla leads workshops and speaking engagements nationwide. As you've seen, she helps people rethink their money and power and generational wealth. And she also speaks at conferences and retreats and corporate events, focused, of course, for financial wellness and legacy planning. And she has a website and Instagram and Facebook and LinkedIn, all of the socials.
All the places.
All the places. And we'll have all that information for you in the below. And thank you so much. It's been such a pleasure.
I appreciate it. Thank you so much for having me.
Yeah, my pleasure. Thank you. See you next time, everyone.
Bye.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.